Hello students, welcome back to another session of the virtual class of economics. Today we'll study the difference between the different types of activity. This topic you might have covered in accounts as well as in organization of commerce. The two types of activity that are there are economic activity and non-economic activity. Every human being keeps himself occupied in some activity to satisfy human wants. Such activities are known as human activities, and they can be broadly classified as follows: economic and non-economic activities. The meaning of economic activity. Economic activity refers to a human activity related to production and consumption of goods and services for economic gain. Whereas a non-economic activity means it is that activity which is performed with the aim of providing services to others without any expectation of monetary benefit. The next difference between is the motive. The motive of doing an economic activity is to earn money, that is to gain monetary benefit. Whereas in a non-economic activity, the intention is done out of love, affection, etc. The measurement, that is, economic activity can be measured in terms of money, whereas a non-economic activity is not measured in terms of money. In the approach, economic activity is pragmatic, whereas you can say the non-economic activity is idealistic. When you do an economic activity, it results into creation of wealth as well as assets, whereas you can say that in a non-economic activity, it will result into the satisfaction and happiness of the person who does it. Economic activity adds value to the national income, whereas a non-economic activity does not affect the national income. So you can say that the difference between economic activity and non-economic activity mainly is that one is done with an intention of earning a monetary benefit, whereas the other, that is a non-economic activity, is done with the intention of solely for the satisfaction of that person himself or herself. To give you an example of economic activity, buying books from a stationery shop. Such an activity can be considered because you're paying money and you're getting the book is an economic activity. Or eating in a restaurant, that is, you satisfy the need by incurring an expenditure. These are examples of economic activities, whereas in non-economic activity you can give an example as to giving charity to a temple or given charity to any other particular fund that can also be included, or giving a gift to your friend. All these are activities which will give you satisfaction, which will give you and which are done out of love, affection, compassion, etc. So we have seen the examples both of economic and non-economic activity. Moving to the next, we move on to our next topic, that is microeconomics and macroeconomics. The entire study of economics is classified into two parts, that is micro and macroeconomics. These are considered to be the two branches of economics. In microeconomics, we are analyzing little bit of information at a time. It studies individual units of an economy, while macroeconomics looks at the decisions of countries and government. While there are two branches of economics appear to be different, they are actually interdependent and complement one another. Microeconomics focuses on supply and demand and other forces that determine the price levels, making it a bottom-up approach, while macroeconomics takes a top-down approach and looks at the economy as a whole, trying to determine its country's nature. We are going to concentrate on the different two branches of economics on the basis of certain parameters. The very first one being the nature. Microeconomics studies individual units, which means a consumer, firm, individual person, etc. Whereas macroeconomics concentrates on the aggregate, that is the whole of the economy. The second one is scope. In microeconomics, the area covered is smaller aspects like prices of a certain good, factors of production like land, labor, or individual demand. Whereas when we talk about macroeconomics, larger aspects like national income or employment level in an economy is studied. The third difference between is approach. In microeconomics, we talk about the prices of certain commodities like a rise in price of onion or potatoes or etc. So here we can see partial equilibrium. Whereas in macroeconomics, we talk about the inflation levels generally of all the commodities as a whole, that is together. So here you can see general equilibrium. The next one is assumptions. In assumption, in microeconomics, we assume that other things remain constant or equal. Like for example, constant factors remaining constant, when price will rise, the demand will fall, and vice versa. Whereas in macroeconomics, there is no such assumptions. They are all interrelated. The next difference is economic variables. In microeconomics, we study demand, supply, price, etc. Whereas in macroeconomics, we talk about national income, inflation, total demand, balance of payment. The next is objective. In microeconomics, the objective is resource allocation and price determination. Whereas in macroeconomics, the objective is the determination of national income and employment. The last one is the type of questions that are related to microeconomics is how much to produce, what to produce, or how to produce. Whereas in microeconomics, we cover questions like how to increase the productivity or how to increase the national capacity, or we can also say how to increase the total employment. So we can see the difference between microeconomics and macroeconomics. So summing up, in one particular sentence, we can say that microeconomics studies individual units, whereas macroeconomics studies the entire economy as a whole.